welcome to the Money Show where your money talks and we make sure it speaks your language. I'm Kavita Thapliyal and this is your show, your money and your power play. We cut the jargon, break the noise and give it to you straight. What to do, when to do and how to grow your money like a pro. For smart savings to sharp investment, from busting money myths to your goal planning. We've got your back, your bank and your future, because here you are not just a viewer, you are the boss of your financial life. So let's buckle up. It's not just the money show, it's the money show, and this is where financial freedom begins. Today on the show we'll be talking about various aspects of investment instruments, but we'll also go up on the counter to get your portfolio queries answered. Just in case you want to ask us any question which is regarding your financial investments, you can WhatsApp us your queries on our WhatsApp number 8657974571. We also have an email ID which is themoneyshow@etnow.tv, where you can send across your questions. So let's begin, and let's begin the show on a very important development. SEBI is shaking things up in the mutual fund space. Now, in a move that could boost capital flow and diversify portfolios, the market regulator has released a fresh consultation paper proposing higher investment limits in for mutual funds. Now, what is the proposal? It's reclassifying REITs and INVITs as equity investments, increasing exposure caps for equity and hybrid schemes. Now, this is all to align this with evolving market dynamics, but not everyone's on board for this. AMFI and MFAC suggest treating them as hybrid instruments. Now, they cite, or the reason that they give behind this is risk and structural issues. So what does this actually mean for investors, fund houses and the future of real estate linked investments? Let's break this down, and I have with me Shweta Rajani, Head Mutual Funds, Anand Rathi Wealth. Shweta, hi, good evening and welcome to the show. So now, as per the details of the draft proposal that we are looking at, it's very important to include REITs and INVITs in something like an equity investment as well. But having said that, from an investor's point of view, from a retail investor's point of view, how do you think it can really work and increase the participation towards products like REITs and INVITs who've not taken off since the launch because of various reasons? Primary reason being the amount of investment needed.
Good evening, Kavita. Yes, like you said, these are instruments. These are, if you actually go to see, hybrid instruments, just like the name says, for everyone's understanding. When I'm saying REITs, it's a real estate investment trust. And when I'm saying INVIT, it's an infrastructure investment trust. What these instruments do is, as the names are saying, they are investing in either real estate projects, or they're investing in infrastructure projects like roads, highways, any kind of an infrastructure. So what they do is they pool investors' money, they invest in the project, and whatever income comes in. I'm just giving a very basic example here. Let's say that an INVIT is investing in a highway project. They would develop the highway. Once there is toll income coming in, that's one source of income which gets passed on to the end investor. How are they called as hybrid instruments, and the need of classifying them as equity? Generally, a REIT or an INVIT would have three sources of income. If it is a listed, then there is a price increase because it's getting traded on a regular basis. So there's a price change that's happening, and that's giving you one increase of the capital gain. Second is REITs and INVITs also pay out to investors in the form of interest, in the form of dividend. So, which is why they are called hybrid. There'd be a certain amount coming to investors' bank account every quarter or every half yearly, in the form of interest or dividend. So that's a recurring payment. And there's a price increase happening. So if the the underlying asset is doing well, the price is going up. If it's listed, you can sell it off whenever you want. And that would also give you a price increase. Because your source of income is coming from multiple places, these are generally termed as hybrid in nature. But in a lot of, globally, if you see in a lot of countries, they're considered as equity investments, because a larger portion of the return will be coming in from the price increase. So that's where the debate on whether we should call it as hybrid or equity. What an investor benefits from is, apart from your typical equity or a debt instrument, Here you get exposure to long-term asset classes like real estate. So that's the third asset class through which you can participate and get diversification in your portfolio. So that's the basic understanding of what a REIT and InvIT is.
All right, one more question, Shweta, and then we'll move on to our viewer queries also. See, now this is just a draft proposal. It will take time for it to actually incorporate and become the part of the kind of investment instruments that we are talking about. Now, leaving that aside, what kind of interest are you seeing now in REITs and InVITs so far, if we talk about retail participation, and primary reason for it not taking off according to you, and via this proposal, since we've seen the investment limits also being relaxed, that'll be really helpful to make it a part of equity schemes or maybe hybrid schemes also, because we're talking about different asset class per se. Do you think otherwise also it will be better for investors to invest in a separate REIT or InvIT kind of an instrument?
Sure. So, just to give a complete picture here, today you have around 7 REITs which are available, and according to SEBI, there are 26 InvITs that are available in the market, but 17 InvITs are what are listed on the exchange. Now, if you look at the liquidity issue, so one issue over here comes in is liquidity. Now, in REITs, liquidity is not so much of a concern because 6 out of these 7 REITs that you have got traded at least once in the last 1 month. But if I talk about InvITs, only 13 of them have got traded at least once in the last 1 month. So liquidity in the InvIT space is relatively low. And this is one reason why, the participation, the retail participation, or I would also say the insti participation in these two products or instruments have been on the lower side. Mutual funds also, if you go to see equity and hybrid put together, or there are around 95 odd schemes which have exposure to them, but the average exposure here is around 2%. The issuer level exposure allowed today is 5% per issuer, but here again, I think it's been far lower than that. The maximum exposure that a particular scheme has had is 9%. That's just one scheme. Two schemes have had around 7.5%, 8% exposure. So even the current limits are not being utilized by mutual funds, mainly because of the issue of liquidity, as well as high volatility. Because REITs, for example, have gone through their cycles of underperformance. The volatility of the instrument has been equity-like to a large extent. So these are two reasons why we've seen the current limits not being utilized, and therefore the consultation paper coming in would bring out a lot of these issues and try and see how it can be, the participation can be increased, the liquidity issue can be resolved, and therefore decide whether there is a need for taking it up to that 20% exposure limit at overall REIT InvIT level, as well as how more participation can come in over here.
All right, so I think we'll just have to wait and see as to what really comes out of all this. But then let's move on to our viewer query section. And before I take the first question on the show, let me also flash our WhatsApp number and email ID where viewers can reach out and give their portfolio details just in case they want any recommendation or advice from our experts live. The WhatsApp number that we have is 86579745571. The email ID is themoneyshow@etnow.tv. Okay. Let's move on and let's take Munish Sachdeva's question. And Shweta, he is from Haryana, Karnal, and he says that he's investing almost 6,000 rupees per month via SIP and will continue to do so for 15 years. Bandhan Sterling Value 2,000, Kotak Emerging Equity 1,000 and SBI PSU Fund 2,000. HDFC Infrastructure Fund he has 1,000, he's investing in this and he wants you to review his portfolio. He's got a thematic and a sector exposure. I have no idea as to how well versed he is with the markets currently, but he really needs to have a core portfolio in place. What kind of a fund is Bandhan Sterling Value? If you could just elaborate on that slightly.
Absolutely. So you're right. Actually, that's the question I had for him as well. That is this a part of your portfolio or this is your only portfolio? Because you are clearly missing out on, well diversified schemes in the flexi, large and mid, and the other categories. What you have is either theme-based funds or style-based funds to a large extent. So, for example, the Sterling Value Fund, right? There is a category of value slash contra where the fund manager is looking at undervalued companies or sectors. So basically, a company where right now it's trading far below its fair value. That's where the fund would go ahead, the fund manager would go and invest. Or there's a particular sector which is out of flavor right now, and but there is a long-term potential. So the fund manager is going and investing in that sector. So that's what value does for you. But that's clearly, if I look at the last 3 years, value's been doing fairly well, especially from 2021 onwards. It's been more of a value market than a growth market. But yes, we're seeing trends changing a little. So it's very important that you have a well balance between both the fund management styles of value and growth in the portfolio. Likewise, you have a PSU fund, but PSU would only invest in the PSU space. Are you missing out on the good opportunities that are available in the private space? So therefore, having a portfolio which is heavy to sector, theme, and a particular style is something that is too high on risk. So that needs to be changed. What I would suggest is you can continue with the Kotak Emerging Fund and you can continue with the HDFC Infra Fund in the portfolio, but IDFC Sterling Value and the PSU fund is something that you should change and move to diversified category of funds. What you can consider adding onto your portfolio could be something like the SP equity opportunities in HDFC Flexi.
Okay, we will take a quick break. Post that, we'll be taking Munish's question, Munish Sachdeva. Before I slip into the break, let's flash the WhatsApp number and email ID once again so that viewers can reach out to us and send their portfolio queries.